Hey everybody, thanks for checking out this edition of the Nashville Investor Webinar video series. I'm your host, Rob Foglia, the owner of Foglia Properties at Keller Williams Realty in Nashville. And as always, you see our mission is to help you grow your real estate investing knowledge and empower you to achieve your wealth building goals. Again, these videos are never meant to sell you anything, so check them all out, get some great knowledge, and let's dive right into today's topic, and that's going to be analyzing your rental budget. If you've missed our last video about basically understanding the financials of buying an investment property, go back and check that one out. It's a great video. It's going to talk a little bit about whether or not a rental makes sense. However, this one's going to go into a couple of rules that we have. As you can see, the first rule on the screen, your rental property, it's got to make you money. Even if it makes you $1, it's technically making you profit. In my opinion, you've got to make more than $1 a month on a property for it to be worth your while. However, you've got to make sure that it's making you some money. Just something to consider. So if your rental property is not making you any money, dump that property and get you another one. There are too many great investments that are out there that will make you money. So just one thing to consider right there. Our second rule that we have is plan for what could happen. Plan for the unexpected. All too often I talk with property owners or potential investors that say, well, I'm happy buying that property because it's going to bring in, say, $2,000 a month, and say that mortgage is $1,600. They may be happy with it because they believe they're going to make $400 a month. Well, as you can see on the screen here, you really do have to put aside 10 to 20% of your gross rent for reserves, or if you're planning on hiring a property manager, that's obviously an expense as well. 10 to 20% is our rule of thumb, and it depends on the property. Obviously, the higher percentage you would want to put more money down when a property you may be anticipating having to replace a major appliance like an HVAC system, or maybe replace the roof sometime soon. Still, though, even if everything is great, it's a brand new property, you still need to be putting money aside because at some point those tenants are going to move out. You're going to have to replace those tenants. There's going to be a cost that's involved with that. Just something to consider. You really do need to put aside 10 to 20% of what you're bringing in for reserves. And our third rule, make sure you're investing this like a business, because it really is. You've got to be running your investment business like a business. You've got to, prepare for taxes, have a profit and loss statement, separate your monies, put it into a separate bank account. There's a lot of different ways that you can do it, and just do it in a way, though, to where you truly are keeping your rental property business separate from the rest of your monies, basically. As always, we appreciate you checking out our Nashville Investor Webinar video series right here. Stay tuned for our next video. It's going to be when to sell your accidental rental. It's a great one. I know a lot of people who need to check this one out. So check this next video out, and we so appreciate your time.